So Thursday, 18th of August. So I was waiting actually for the data to come out before we start this live streaming. So that's dollar index in a 30 minutes chart. We've seen a big bounce that came after the announcement of the data. So I'm going to share the calendar as well with you just to preview a bit up in regards to the results from the US. Actually, the jobless claims, the weekly jobless claims as usual, along with the Philly index, Philadelphia index, so which actually beat expectations significantly, was significantly strong. Let me just quickly okay, here we are. So these are the data that we have seen so far today. Actually, the spotlight of the day was on the US data and on the US session data. So we have the jobless claims, as I already mentioned, and the Philadelphia index. While on the spotlight will be also the existing home sales later on, along with speeches. So George and Kashkari are later on. So anything that they say in regards that will give us a hint in regards to how aggressive the Fed will get in September, because there is a lot of discussion on whether it will be a 50 or a 75 points in September. So just before we get back to the data to just explain a bit what they mean. So as you can see over here, jobless claims came at 250,000. The initial jobless claims 250, lower than expected. The continued jobless claims also a bit lower than expected, but above them last week's reading, while Philly Fed actually it was significantly strong in August, 6.2 from the contraction of a 5 that it was expected, um, and the construction of 12 points back in July. So a very strong reading out of Philadelphia Fed Manufacturing Index. And at this point, I would like to remind you that just quickly what the Philadelphia Index is. Philadelphia Index is pretty much giving us a picture, giving us the manufacturing picture from the US, so the manufacturing conditions and manufacturing and movements of manufacturing. So the fact that it came above, it came positive first of all, and well above expectations. It presents that manufacturing sector is actually trending. That I'm not sure whether that's when was the last time, the last a few months that we have seen this such a not months I should say since the pandemic started, that we have seen such a strong reading from Philadelphia index. Actually, let me find out. The last time that we had a positive reading from Philadelphia Fed survey, it was back in March. It was just the point. It was just was it 27? Okay, it was 27. While yeah, so it's pretty much it gives us an idea on whether the manufacturing sector is an indicator of manufacturing sector trends and also an index of industrial production. So let me just get back to the chart as well, to the MT4, just to some technical analysis as well. Welcome everyone. Welcome Mohammed, Danny, Moin. Welcome. Just a bit. Yes. Yeah, it's good that you bring up the dollar yen DRC Busiso. I noticed that dollar yen. Where is it? I had it in front of me earlier. Here it is. Yeah. So it was a big candle over here in the dollar yen. But let me just allow me just a few minutes just to explain a bit the data and why they affect the market and actually how they could affect the Fed's September meeting. That is what I said. There is this question whether they're gonna be they're gonna proceed with 75 points or 50 points hike, especially after that FOMC minutes yesterday that they weren't clear at all and they didn't give any hint in regards to the September meeting. So we have seen, as we have seen, the Philly Fed actually recovered so into positive territory, and that is a positive. Not only the fact that it's a much better than expected reading, but also a positive one. So that's something that suggests that what we have seen, that the U.S. economy actually could uh, could actually, we cannot really tell that it can recover yet, but uh, what a Fed has done so far, it seems that it had some positive impact on trying to save the US economy from a slowdown and recession and etc. So really positive, something that's is positive for the dollar index as well. On also the initial jobless claims I mentioned earlier, also better than expected. So that suggests that the tightness in the labor market is still on. So I'm not sure what's the odds for a 75 points rate hike, but Stuart mentioned it earlier, but I didn't. Uh, Currently, or at least this morning, there was a 75% odds of 50 points and 43%. So you see, it's a bit 50-50. So that will change actually after the data. So that could increase. So let's wait and see. But yeah, it's overall, we could say that it's a positive session so far, a positive result so far for from US. While I didn't mention at all where is my calendar? The Canadian data. Where is it? So we had also at the same time we had the raw material price index significantly missing expectation at 7.4%, and the industrial product price the same significant missed of the material price index, raw price index from Canada, and the industrial production price also a significant missed. So, oh, okay. So a big the okay. So as I mentioned earlier, I mentioned that this morning it was like 50, 43, 50, 57 was the odds for, no, with vice versa. Maybe this is like 57, 43 was the odds between the 50 points and 75 points. So this has changed, as Stuart informed me just now. Now the markets are really turning to the 50 points rate hike with 63%, 63.5% odds. So market is pretty much just because you might forget the percentages, but yeah, 60, 60, 65, 35 if you prefer. So for a change of up to 50%, 50 points rate hike in September. So just to summarize a bit, we had a bit of we have seen a bit of a slight decline in the U.S. inflation last week. We're still getting some tightness from the labor market. Okay, also positive. Today we have the Philly as well, also positive. So that suggests that the Fed could get less aggressive because they are already seeing some fruits out of their aggressiveness, of their so far aggressiveness. So yeah, so this is pretty much it in very briefly. But what we have seen from Canada wasn't something positive. I will cover Canadian data later on. Just let's get back to the dollar because you keep asking about currencies that you want me to cover. So positive data, bounce of dollar basket, and that's why we've seen the this is the 30 minute chart dollar yen because someone asked about dollar yen. as I keep saying, first come, first serve. So, si position, dollar yen. So, a jump on the data, retested, actually a break above 135. We have another 8 minutes to go until this candle is closed, but let me turn down to the 15 minutes chart just to see where we're standing. Indeed, 15 minutes candle close above is a big candle, strong bullish candle, breaking the 135 territory, however, and actually closed above it. Okay, so okay, something that I will check once again later on, but all we can see from this very short time frame over here. Oops, where's my, okay, connecting the lows. So there is a bit of a change in the intraday picture. We are getting on this bounce. Actually, just before this bounce, we got a bullish cross of the stochastic. However, it hasn't really turned, or turn above the 20 territory. MACD is significantly neutral. RSI still below 50. So will this bounce extend it? We still need a confirmation over here. We still need to see the asset turning, actually extending this bounce, and um, to start moving above the 35 territory. So if that doesn't happen, then this could be just a limited bounce, but let's wait and see. I'm gonna come later on. But yeah, no confirmation for the time being, no bullish or bearish cross of the moving average, a pretty much mixed momentum indicator, so we cannot really tell. Overall, you should remember that, oops, a lot of lines over here. Let me get rid of them, sorry. So yeah, I'm gonna keep them actually. Why? Because these are areas, key resistance areas, and I think I put that on last week. Yes. So the dollar yen has extended its gains for 1, 2, 3, 4, 5 sessions in a row. However, as I mentioned last week, the 135 60 and 135.90, this area between these two levels is a very strong resistance area for the dollar yen. So as long as it doesn't break that territory over here, okay, so let me draw it again over here, okay, the asset could remain neutral, or we might see at some point a pullback. For the time being, remains neutral in the medium term, while there is not a clear direction intraday either, as long as it doesn't confirm whether this bounce will extend or not. I'm gonna get back to you as soon as this candle closes. So soon dollar toggled up. So um, so let's shift to gold. Where's my gold? Here we are. Yep. So in general, dear Danny, uh, so I'm getting both Facebook and YouTube questions. So that's brilliant. Yeah, a bit of a pullback on the strength of the dollar just on the release. So we're seeing the dollar, the gold over here rejecting the 50 period moving average in this 1 hour chart, a big pullback over here, reversing nearly 3 sessions gains. But in general, you know, guys, that gold actually is on the back foot for how many consecutive days? Since actually 12th of August. So the whole week, I should say. So it suffered. So let me put the daily chart on so you can see what I'm talking about. So since, okay, here we are. This is Monday's candle. So since the beginning of the week, we have seen it pulling back. And the fact that yesterday, here we are, that yesterday, dear Danny, it crossed and closed actually below the 20-day moving average. That was quite key because it suggests that the outlook for this bounce that we have seen since the mid of August might run out of steam already. The asset fell to consecutively for 8 days in a row, failed to move above 1800s. Very, very important, as you know, when psychological resistance level for gold, failed to break it, and we have three consecutive negative sessions with this significant cross below 20-day moving average, implying that this bounce might, this uptrend, if you prefer that we have seen since the mid for a month now, it looks to run out of steam. um, so we are, and you can see that stochastic also it turned below 50. MACD is turning back down again. So everything from from a technical perspective had a big question in regards to gold, and whether it will recover. Actually, as I said, that opens pretty much the doors down to 1730 or 1700s territory for gold. So for the time being, so this candle, sorry, let me go to the 30 minutes candle, because this will close soon. It's in less than a minute. And can you see? Oh, it just closed. So look at the body of this candle. I am in the 30 minutes chart, guys. Okay. Now I'm in a 30 minutes chart. What I mentioned earlier about the breakout of the 20-day moving average, this was in the daily chart. So daily chart indicates that we might have seen the end of this uptrend, this 1 month uptrend. Intraday, pretty much something similar. This is a very, very big bearish candle because of the strength of dollar due to the positive data and the expectations that the Fed will remain hawkish. But as you can see, now the markets are pricing in a 50 points rate hike for September. So what we're getting right now, this is a 30 minutes chart. I have my fast moving average over here, the 5 and 9. I have a 50 period as well. Yeah, as you can see, this candle, this 30 minutes candle, is massive in compare with the last five candles, breaking this immediate support, this over here, the latest lows, breaking the latest lows, and moving below all my moving averages in this 30 minutes chart, below the 5, the 9, the 50 as well. And just now it keep extending. This is the new candle, the new session, which keep pressuring and keeps moving southwards. So next support and resistance levels that we should be aware of. So that would be that's significant. It already breached the 50%. So the mid of this latest bounce, this intraday bounce. So it already breached it. It didn't broke it yet, but the next immediate support levels lie over here at the 1765, which is also the 61.8 Fibonacci level, but our latest up fractal, and coincide with a breakdown of the 20 period moving average. So that a breach. This is the next immediate support level, which you consider to be a very significant one, because the fact that, other than the fact that it's the 61.8 Fibonacci level, the latest up fractal is also a level below the 20 period moving average. So that implies that the gold could enter the negative, the lower area of our Bollingers. Okay, so if that happened, then the next support level for the gold will be down here, and I will put that with a rectangle. Why is that? Because that could open the doors to this territory over here, the 1760 and week's lows at 17. Let me just confirm that. 1759, 70. So over here, this is there to be seen, because if that is broken, the next area to be seen is is week's bottom. And just for you to be aware and get prepared for tomorrow's session as well, or later on, so overnight session as well, a break of this territory over here, a break of the week's lows. Okay, now we'll put my daily chart for that. A break of the week's lows. Okay, that could turn the attention to the 17, to the lower Bollinger Band, daily Bollinger Band area, okay, and the 1700s territory. Okay, let me put it. Let me just be precise. Do you get why is that? If not, let me know. Okay, so that was for gold, dear Danny. Hopefully, it was and dear who asked for gold. It was Danny. It was Balukan. It was Sadi. Uh, who else? And Navid. So guys, if you need anything else, and Muhammad as well, if you need anything else in regards to gold, just let me know, okay? Um, no, not really. I can't really see that, dear Mohammed. 1800s. No, 1800s for the time being is an area that it rejected. The gold rejected several times, actually 10 days in a row. So actually, it's now turning lower. So the outlook looks to have turned already from neutral into negative one. So where next? Where next? Pound yen, of course, one of the most volatile currency pairs that we have available. So let me give me here we are. Get rid of this one. So here we are. Let's start with an intraday basis. Dear Michael. Okay, that's interesting. We have like a complete pullback. That was earlier. That was in the beginning of the day, but supported. So what we have over here? Okay, so if I connect these lows over here, it looks like, let me just, okay, okay. So we have a lower low, but afterwards a lower high, sorry, let me get just, okay, what we have over here. So lower low and then a higher low. But the key over here is that it managed to hold this support area over here. It managed to support the whole day, even though it was tested again and again, it managed to be held above the 162.40 territory. So that has now converted into a nice floor for the asset intraday. Okay, where we're standing. A big dip before the data, bounce, held support over here, held this floor on the announcement, but there's still a lot of selling pressure if we consider the negative MACD, the flat stochastic below the oversold territory, below the 20 barrier, so within the oversold territory. So that implies, can you see that? That implies that it will either enter a bit of consolidation or it will remain under pressure, okay? And as we can see, the fast moving averages are keep pointing downwards, and that's not that's not only that, is also, as I can see, if we zoom in a bit on this latest 30 minutes candle. Can you see that right here? This candle, the tail, okay, the tail is bigger than the body. So what that means, it means that even though the bulls tried to push the price the higher they could, the sellers regained the control and they brought the price back lower. So there is, so if we just summarize a bit all these signals, it looks that for the time being, the sellers remains in control. However, as long as this bottom over here, that it has been held for 1, 2, 3 sessions in a row, as long as we don't see a break below that floor, then it looks it looks to be just a bit of consolidation for the time being, sideways movement. So dear Michael, keep an eye as at the 162.40 territory as your as the very nearest short-term support, while on the flip side, that latest peak, okay, here 162.73, which also coincides with the latest upfractal, holds as our immediate resistance area. So a break of 162.40 could imply to new lows for dollar yen, while a return back up with a confirmed breakdown and a closure above the 162.73, it could imply to retest of that latest of the day's highs and the 163 high. Okay, so Kiwi, yes, of course, antibodies were in the spotlight this morning, even though yeah, I think Aussie and Kiwi have been, let me just, have been two of the biggest gainers now. But let me just double check that. Yeah, yeah, they started the day weak. But then they managed to rebound, both of them, both antibodies. I'm referring both to Aussie and Kiwi. So this is Kiwi, dear. Who asked for Kiwi? Dear Mosa. Okay. So Kiwi, I'm gonna keep your. Oops. I have some spams. Okay. Um. Yeah. So Kiwi. Okay. I'm gonna start with intraday basis. Okay. Pullback it is, and let me just measure this pullback over here, because just to make sure that this is not an evening start. Let me just find the mid of this candle. Okay, that's very interesting. No, I cannot zoom in, but this candle looks to have closed below the midpoint of this first candle in this three session pattern. So I'm not really sure though whether it can be. Is that the case? If that's the case, that would be an evening star formation, so a bearish formation. But what is striking me is that this big tails lower, but without a sufficient, without a, without a further push. So it's like it's being held, it's struggling to break, to extend lower. So that's not clear at all. So it looks more neutral than. Okay, I'm gonna use this low over here as my immediate support area until this consolidation, it's over. So we are getting a lot of, I'm afraid, there was an intraday, at least in this 30 minutes chart. Um, Indeed, Kiwi was one of the strongest currencies, and against dollar, we have seen a big bounce since earlier this morning, since the European Open, actually pre-European Open. Top indeed at broke actually the 0.63 territory, but currently it had a slight pullback and it looks to consolidate a bit. So we need to closely monitor because there is a really mixed picture over here. It's a pullback, but not a significant one. So you see that there is still some bullish pressure to hold the asset above at the highs of the day. MACD is positive, but the neutral line, the signal line is at zero, so we don't have a confirmation in regards to a bullish bias over there. Stochastic is the vice versa. So stochastic is actually it has just posted a bearish cross and it keep pointing to the downside, while RSI is flat. So very mixed signals from a technical perspective in Kiwi. So that's what's going on intraday. Daily, and actually the medium term outlook remains actually turned negative for Kiwi, and this is because of this significant drift yesterday, which bottomed at the 50-day moving average, below the 20-day moving average, and breaking this the 1 month channel. Can you see that? I'll put the channel on just for you to see as well. So here we are. You see, 1 month channel was broken and closed below it. So implying that a downtrend could start. Um, so let me just, so a breakdown of the closure actually at the top of the day below the 50-day moving average in the 0.60 to 50 territory. It could retest the 0.62 and this lower Bollinger Band line at 0.6180. Okay, that's the next support area in the medium term if we see today's session turning bearish again. So that will mean that we're going to have 4 consecutive bearish days. Pound for Martin, for Dennis. I'm gonna get back to you, dear Karim. I saw your comment. I forgot anything. No, pound it is. Okay, so, oops. So, so we have it's okay. Just fix a bit this, and give me a second. Just a second. Here we are. Reason why I'm doing that is because I want to show you that this is the day chart for cable. Okay, I'm starting with the daily chart because I want to show how important this 1.20 territory is. First of all, it's a triple zero, okay, round number, but 0001, and the latest down fractal, and the support area for pound for cable since the 25th of July. So the since okay, here we are. Since the 25th of July, the cable it was actually moving into a channel, bouncing between the 1 to 20 and 122.60. I should be more precise, actually. Here we are. No, that should be just fine. 50, 22.50. Let me just measure to be sure that the middle line is my. Yeah, okay. Here we are. So, fell, as you can see, within the month to extend gains. So that reacted as a key retracement level. So every time that was retesting this territory, we had a pullback, then again retesting a pullback, and this is what happened so far this week, and since last week. Failed to break the upper trend line of the channel and turned back down, and currently retest the lower line of the channel, and the round and triple zero number, the 120. That's a very, very, very important level to be seen. Okay, for the time being, the cable in the daily chart remains neutral as long as we don't get a daily candle that will close below this number, this triple zero number. We can as long as we don't get that, then that means that the cable is still in a range. So a very important level to be seen, because if it breaks it and confirms closure below that, then this could open the doors back to the 117 territory I was seeing back in the beginning of July. Okay, so keep an eye on that. Now, if I brought the fundamental perspective in the front, pound should remain weak against the dollar, not solely because of the how aggressive the Fed is. While the Bank of England was a bit late, it started increasing rates and etc., but it was a bit late. So there is a bit yield differentials and a bit policy differentials between UK and US. But it's not only that; it's also the economy of UK. So yesterday we had seen inflation at 10.1%, so 40 years high. So that is the data. I keep adding. We don't get anything positive from, or nearly anything positive from UK economy. No a sign of. And no positive sign, just a continuous signs, signs that it's in a recession. So that's so from fundamental perspective, pound expected to remain weak for the rest of the year. But now, from technical perspective, you should keep an eye on the 120 because that will be a sign that the medium term outlook can change, has changed from neutral to negative again, and we could see this downtrend resuming again. Now, intraday 30 minutes chart, very interesting. Let me bring my intraday. Here we are, set up on because I wanted to see my 5 and 9 exponential moving averages over here. So stochastic keep pointing downwards. There is some area to be covered still. The same stands for RSI. Further points downwards, there is area to be covered. Okay, the only one that is neutral is MACD, but negative stochastic, negative RSI, just now a bearish cross of the 5 and 9, along with the breakdown and a rejection of 50 and 20-day moving, a 20 period moving average in the 30 minutes chart. They just turn their attention into the next support levels. So just let me use my tables as usual. So that down to 120.26 and Bollinger Bands over here at 120.07. Okay, so eyes to be support areas to be seen just in the very, very tight time frame over here. So pretty much the mornings, the Asian sessions lows over here. So okay. Euro dollar. Many people ask about euro dollar. So finally got there, and I'm gonna resume gold. And someone asked about, I didn't ask about Dow Jones as well. So uh, okay, that's that was it. By mistake, it was a 5 minute chart, but you can see the big fall and the sharp fall that we got. So euro dollar significant, actually a big drift on euro dollar over here. Sorry, just a second. Okay. Something new about dollar index? Yes, it is. Okay, Fed Dali speaks to CNN. Core service inflation is still rising. Fed, so that's the words of Fed Dali in the CNN interview. Service inflation is still rising. 50 or 75 points is reasonable for September. Fed needs to brittle economy a bit and slow the pace of inflation. The raise and hold strategy pays off. That's his words. Okay, that's why dollar remains on bid, and we had another strong 30 minutes candle. So on top of the data, Dali is actually is responsible for pushing dollar even higher. Okay, yeah. If this is what he said, if he said that the raise and hold strategy pays off, yeah, that's add to the strengthening of dollar because clearly implies that um, that is not solely about the September decision, but also later on that stress that Fed will keep increasing rates. Yeah, we will continue to raise rates to right size it. Okay. Okay, very hawkish Dali, apparently. That is what is boosting it even more other than the data. And the fact that they had a cool of labor market as a cooling of labor market as well. So, okay. So on the strong dollar, we have a really big drift in the euro dollar over here, back to the lows of the week, back to the 101.50 territory with, can you see, a confirmed bearish cross in this 30 minutes chart over here. Bollinger start extending lower southwards. MACD's negative RSI keep extending lower and pointing lower. The same for RSI and stochastic. So negative technical picture in the euro dollar intraday in this 30 minutes chart, which pretty much turns the attention to the Tuesday's lows and the 10130 territory over here. So MACD turn back down again. RSI the same, stochastic the same, and they both point further lower. Bearish cross. So yeah, next area to be next support level to be seen at 10130, while on the upside only a pullback above the, here we are, that's the about the 20 period moving average could imply to some gains, but yeah, let's not forget that we had also the just no, sorry, it's Telegram, keep buzzing. Forgot to to mute it. So yeah, this morning we also had, let me just come on. Now we had the core inflation by a Eurostat. So that held neutral. So inflation is really holding high in the eurozone. So that didn't help either the euro. While just we had some comments from ECB members such as Kazakhs, a signal that more rate hikes are underway, but in the ECB, ECB it's very neutral. Say it's very muted in regards to the rate hike, so they insist on their PPP purchases rather than get more aggressive and keep rates and start aggressive rate hikes. So yeah, okay. So yeah, so that was in regards to euro dollar. Sorry guys, I got distracted a bit. So yeah, pull back, get back to the lows of the last 2 days. Next support area is Tuesday's bottom, while overall, Europe is in a recession. ECB was very late. Also, he's facing an energy crisis. There is and the differentials, the policy differential between EU and US could hold the euro dollar on the downside in the long term. So yeah, so that was. Let's move on. Someone asked me to turn back to gold again. Yes, just a reminder that for final questions. Okay. So okay, Very interesting. This tail is very interesting over here. So we keep having a strong dollar, but gold is opposed to it. Gold sustain a key. We have a big tail over here, but bulls getting the control. So what we have over here? What's going on over here? Let me just scan a bit to see whether I missed anything. Sorry. Okay. So gold initially responded to the strong dollar, but there are some. Not sure whether this is these are some cash outs or something else going on, but that that candle over here implies that there is still support on gold. So, is it the fact that we now expect less rate hike, a less point, the less increase than the 75 points? Is it looks to have, you see that? It's still the intraday outlooks is still negative, but we didn't get that confirmation of a breakdown of the 1765 yet. So instead, we had some bullish pressure over here that managed to hold to turn gold back to the 1767 territory. That looks a bit. That looks to lack out of steam. So yeah, might be some cash outs over here. We're responsible for the bouncing back. For the time being, the technicals are not really supporting a rebound at this point. Stochastic is still pretty flattened and below the 50 RSI, sideways as well. Fast MA is flattened, implying to consolidation. So let's wait and see. Let me measure that. Let's just see. No. Okay. No, I cannot really measure that over here. So it still has a long way until it recovers. And until it signals that there will be a resumption of the upside to the upside again. But either way, as I mentioned, the 1800s, it failed several times to break the 1800s. So the outlook for gold remains negative. Any other questions? Let me check again. Impact, what happened? It's close.
Well, it's just all down.
Down.
Yeah, marks have still down.
Okay, let's do it. Okay, okay, I'm gonna get back to the stock markets, Stuart, from it that they opened just now like negative. Okay, in regards to their Baluka, it is what it is. Don't forget, yeah, from fundamental perspective. Okay, don't forget that gold depends from the central bank. So the tighter the tight policy, so rate hikes are negatively correlated with gold. So if the Fed continues to increase rates, that is expected to add pressure on gold. Also, don't forget how correlated is with treasury yields. Okay, so elite on treasury yields is actually, for example, yesterday the fact that the treasury yields were a bit steady, that helped gold to stabilize as well. But a rise in dollar, rise in yield is something that adds pressure on gold, as I already mentioned. So what you should really focus on, other than the Fed, is also on the yields. Yields help us to figure out the moves on dollar and gold. But yeah, fundamentally, for the year, gold is expected to remain under pressure as long as we don't see the Fed pausing, stop hiking, or stop increasing rates. Then gold is expected to continue being under pressure. Um, Now let's shift to stock and the Dow Jones. As I just mentioned, markets open in red, as we say sometimes, in red negative. So you see here it was here is the US open over here right now. That one, the latest candle, extending losses. Uh, so let me just come on, and here we are. So it's everything is correlated. The hawkish Dali and the positive data boosted dollar, but added pressure on stocks. Remember that higher the interest rates, the more the bearish pressure on stocks are negatively correlated, because that means that, for example, we consider a company, okay? We consider a company, that means higher expenses because and higher interest rates, so paying more, so that has a negative impact. If you just want, very, very briefly, just to give you an idea. So Dow Jones over here, let me just turn back to 33,900. Okay, we just put the intraday template as well. Here we are. Let's get to the 30 minutes candle. Here we are. So I just, is this an ascending triangle? Oh, give me a second, just over here, just to see. Okay, here we are, connecting the lows, connecting the highs. Looks like a triangle. Let me just, okay. Much better. So, decisive pullback drop prior the open, but also resuming into the US Open. Um, Bearish crossover here, continuation to the downside for RSI, and stochastic MACD is at 0. Next floor to be seen will be this trend line over here that I have put in the performance of the last 2 days, along with the clash, the confluence over here, 33,850. So that's the confluence of overnights, so of this latest bottom and the lower Bollinger Band over here, 33,850, which is actually ready to break that as well soonish. If that breaks, let's check together for further support levels if we see the asset extending losses further. So, okay, that's right now. Where's my Fibonacci extension? Oops, sorry. Okay, sorry. I'm struggling to put that on. And I will have it with a blue line because it's not visible. So So here it is. So breakdown of the latest down fractal, which coincides with our, where is it? Okay, sorry, here we are. So breakdown of 33,850 territory, coinciding with the lower Bollinger's and latest down fractal, could turn the attention to this floor over here that it has been held the whole week. So let me just see what's going on. What is key? I'm gonna turn you on the daily chart, okay? Because get rid of all this just to make. Okay, let me get rid of all this just to show you something quite significant. Because for 3 days, actually, so far this week, we had the 33,790 territory as the very, very short immediate floor for Dow Jones over here. However, that's not a so significant support level. This is a more significant one. Is the 200 day moving average that you should keep an eye on. So 330. So over here, just to be precise, even though at a test of the 200 day moving average or a breakdown below it, it won't turn the bullish outlook of Dow Jones into a negative one yet. We need to see the asset turning back below 33,000 in order for the outlook to change, because for more than a month, it entered an up channel with momentum actually keep rising. So only a move below the 33,000 could turn the outlook for Dow Jones into a negative one for the time being. Intraday now, as I mentioned, immediate support and significant support should be that 33,850 territory that, coincides with the lower Bollinger's and the latest bottom, and that could open the doors to the 33,700 territory. So, guys, if you don't have any further questions, I'm gonna call it a date, okay? Have I missed anything? Oh, let me scan a bit. So I think not. We said about the week open of the US stock market. We've seen Dow Jones. Do I have Nasdaq over here? I do have Nasdaq as well. Yeah, already crossing to the lower Bollinger Bands over here. So yeah. Yeah, for the Dow Jones, you should keep an eye on the 200-day moving average. Is quite important. The same stands for S&P 500 as well. 200 is a key support. Sorry, for Dow Jones, the USA 30, 200 is a key support level, while for S&P 500, the 200-day moving average is a key resistance, okay? So keep an eye on these levels. And that's pretty much it, I think. Yeah, the strong data, the hawkish Dali, they should, as you can see, they keep supporting significantly the dollar. with the, oh, nice, we it broken already the August resistance, and it's nearly a breath away from from this, the 107 territory. Remember that a confirmed breakout of this area could open the doors back to the 109 level for dollar. Okay, very so dollar on bit remains on bit. Very significant session so far. Very strong session so far. Rejecting the highs that we have seen in August and actually breaking August highs. So yeah, next to be seen is a breakdown of 107 and a bridge and break of 107.20. So that means that could open the doors, as I said, to the July's peak and the 109 territory. So that was it from me. Thank you for attending. Hope you're having a great day ahead. Take care. And we can see you again possibly next week with a live streaming as usual. But we keep posting our thoughts, articles, and etc. in our analysis page, analysis.hfm.com. So feel free to join us to actually check our articles, or why not follow us in Instagram, Telegram, LinkedIn. It's the materials is all over the place and it's for free. Okay, thank you very much. Have a great day ahead and take care. Bye.